In today's video, I'll be sharing with us a simple day trading ICT strategy. Now, I have used this strategy to pass my Perform account, got funded with it, and also made a lot of money with it. And I felt like sharing it with my YouTube community. Why? Because there's a more reason we created this channel. I'll be sharing with us the rules of this strategy. Guys, it is very, very important to write down these rules. Why? Because they say the faintest pen is better than the sharpest brain. If you cannot write them down, I'll be sharing it with you on my screen, so just take a screenshot of it as we proceed. The first rule is to recognize the current trend in the market. Don't worry, if you don't know how to recognize the current trend in the market, I'll be teaching you a simple trick on how to do that. Second rule is to look for the last break of structure in the market to mark the swing high and the swing low of the structure. Third rule, will be looking for a breaker block, fair value gap, order block, or the origin low that broke market structure. Now, all these zones that we are looking for must be below 50% of the swing. You understand? It must be below 50% of the swing that broke the market structure. And now, the last rule will be looking for a momentum candle. A momentum candle with a huge volume that is moving towards our direction. Or we'll be looking for good candlestick formation that actually support our bias. To establish a trend, we must have 4 points in the market heading towards the same direction. On a bullish scenario, we should be having a low, a higher high, lower high, and a higher high. So that's 4 points heading towards same direction. With all this being said, let's jump into the chart and let's see a real example. So before we continue, I want you to hit the like and subscribe button and also drop a comment. Please, it's going to help the algorithm. Share this video to a lot of traders. Thank you. So as you can see on the chart, GBPJPY has been bearish for some time, and we know each bearish trend, every bearish trend will definitely have a lower high, a lower low. We have lower high, lower low. So now, if you look closely on the chart, price failed to take out this previous low here. Price failed to take out this previous low, creating a bullish engulfing candle here. That is not what we're actually looking at, but these are confluences indicating that we are about to going bullish, indicating that the bearish dance is over. And now, to establish a bullish market, we need 4 points. We need 4 points to establish a trend line. You need 3 points to establish a bullish market. We need 4 points. Now, this was the previous lower high in the bearish trend. So now, to establish a bullish market, price needs to take out the high, which we see clearly happening here. Price took out this high here, indicating a shift of market structure. Price took out this high here, indicating a shift of market. And now, after every shift of market structure, there must be a retracement either into a fair value gap, an order block, a breaker block, or the origin itself that started the move. So all you need to do is just to wait for price to react to any of these zones. Yesterday, price took out this high here, clearing the buy side liquidity sitting above this high. And all I needed to do was to wait for a pullback into this fair value gap here, on-field fair value gap here. So this morning, I woke up being in the London session, I head straight to the charts and saw that price is actually reacting to the fair value gap that I spotted yesterday, which is here. And all I needed to do was just to wait for a momentum candle indicating that the buyers are winning the party. When I saw this huge momentum candle, I entered my buy and sent the signal to my community. We're aiming this buy side liquidity here, so which will be also a break of structure. Price came and take out the buy side liquidity pretty quick, in less than 30 minutes. An extra confluence you can actually use is your fib. You just all you need to do is to plot your fib from the swing low to the swing high and watch how price reacts. It is good when price reacts to levels that are below the 50% of the fib. You know, it's mean that price is in it means that price is in a discounted area, and every good trader will always want to buy or sell in the discount zone. So if you plot the fib from the swing low to the swing high, you can see that price actually pulled back to the 79%. Yes, I'm not the I actually did not originate these fixed settings. The first person I saw using these fixed settings was ICT. So I'm going to leave it here on the screen. You can take a screenshot um, of my settings and replicate it on yours. So price pullback to a discount zone, and during this London session this morning, we can see the big spike of clearing this buy side liquidity. I'm still expecting what's it called, DPY to go bullish. So if I'm to re-enter this trade, what I will simply do is to wait for price to pull back. Like I always say, the market seek two things: inefficiency and liquidity. So which I'm seeing here, there's an unfilled fair value gap here. So all I need to do is to wait for price to come, tap into this fair value gap, and move on. So I will be expecting something like this. Something like this, yes. So if I should see price coming toward this zone, I will definitely be preparing to buy. I can't buy from here. You have no business buying here. This is a premium zone. You have no business buying here. So that is all for this strategy.